Okay, so let's look at what's really happening when we're doing infinite banking. We buy this insurance policy and it's designed for cash. I mean, yes, there's death benefit, there's illness protection, there are all those ancillary benefits that you normally get in an insurance contract, but the primary focus is cash value. It grows every day uninterrupted, guaranteed, right? Now we're going to buy this insurance policy from a mutual insurance company. And the reason is that the mutual insurance company is owned by policyholders. Stock companies are owned by shareholders, right? So we want to have it be a mutual insurance company. And as a policyholder of that company, we have a contractual right to take an interest only loan from the insurance company. Now, here's where a lot of insurance agents don't understand what's happening is when we take that loan, our money is not going anywhere. The insurance company simply puts a lien on our cash value, and they have to give us their money. Now, think about that. Our money stays in this tax favored environment, growing, uninterrupted, guaranteed, and we have a contractual right to borrow up to 100% of our cash value from the insurance company. So now we have other people's money, we have use and control of it. Really remember what a bank wants: use, control, and liquidity, right? Okay, so then we put it in our bank. Well, what are we going to do with it? Now, there's a lot of people online that are talking about how to pay off your cars using IBC and your debt, your student loans, and all of that. But what we really focus on is how do we take this and buy cash flowing assets? Now, one of the best cash flowing assets is real estate. So this is real estate project number one. It's going to cash flow. Where we're going to flow that money back to us, right? Now we get to choose if we flow it back to the insurance company. And any principal that we pay, every dollar of principal that we pay, if we choose to, reduces our lien, increases our net cash value. And so then what are we going to do? We're going to do it again. We're going to do another loan, obviously interest only, unstructured, right? Interest only. Now think about it too. If we're doing this in a business, and I'm not giving you tax advice, but this could be deductible. Now think about that. How many things in your life, the money you're paying, you get to deduct, and the money you're earning over here, you don't have to pay tax on. Okay, so we take this other loan, right? Our second loan, and we buy more real estate. It cash flows. Flow that back to us. We can flow it to the insurance company if we want to. It reduces the lien, increases our net cash value, and we just keep doing this over and over again in an unlimited amount of assets over here. Remember, we believe in buying assets, not instruments, not Wall Street instruments, because what we really want is cash flow. We're not trying to build up some lump sum of money and try to live off of it for the rest of our lives and hope that we don't run out of money or wait 20, 30, 40 years to do that, depending on how old you are. No, what we want is a banking system that allows us to flow all of this money back to us instead of somebody else's bank and then letting them take it and become wealthy, right? This is a closed system. We control everything here. Okay, but it is a participating sport because we have to know what to do with this money, right? Okay, now think about this for a second. You have a rate of return over here. You have a rate of return over here on the assets. You get both. Normally, you would have to choose this or these assets. If I had money in a mutual fund and I'm going to take it out, I get the money over here or I get this. But with infinite banking, I get both. Okay. It's an and asset. All right. Here's something else to think about. Are we buying the assets over here, in this case, real estate, just for the growth? No, we're buying it to cash flow because pretty soon we're going to have so much cash flow coming in that's going back into the policy and paying all the policy premiums and everything else that we're going to need to expand and have more policies to have more capacity because all of our assets are going to pay those premiums, not our income. Okay. So the other thing that we're going to have is rate of cash flow. That's a return on our banking system, our infinite banking concept, right? The other thing that we have is we have legacy rate of return because someday we're going to graduate from this world and there's going to be a tax-free death benefit paid. Well, when that happens, there's a rate of return on that. But here's the cool thing. Now, remember, this is the money pool, and this is what so many people on the internet are focusing on. These are the assets that we're buying. Okay, there's plenty of people to give us advice on that, plenty of books to read, plenty of experience, plenty of people to partner with. But right here, this is the key, the process. This is the key to infinite banking. This is what we coach at Create Tailwind. We're going to coach you on how to do this. We're going to show you and how other people have done this. In the insurance contract, yes, we're going to set up the insurance contract in the most favorable way so that you can get as much volume through your banking system, not focusing on rate, focusing on volume. Thank you for watching, and good luck building your wealth to financial independence.